Good afternoon, everyone. I trust you're all safe and well. Welcome to all of you situated in many parts of the country. I'm speaking to you from the lands of the Wurundjeri people. I acknowledge and pay my respects to their elders, and I acknowledge the traditional owners of the lands from which you are all joining me today. My name is Paul Sokolowski. I'm a partner and the tax practice leader at Arnold Block Leibler, and we are very happy to be presenting our webinar on the ATO's Top 500, Next 5,000 and other programs in private wealth with our very special guests from the ATO. In addition to you and our guests, I acknowledge my senior partner, our firm and tax practice head, Mark Leibler, and my other partners and colleagues from Arnold Block Leibler. Before I introduce our speakers, a little bit of housekeeping. We will take questions at the end. If you have any questions, please use the Q&A button at the bottom of your screen. We will get to as many questions as time permits. It was written somewhere by Faulkner, I think, that the purpose of lighting a match in a darkened forest is not to see things in a better light, but to see how much more darkness there is. It would appear from the latest ATO figures on the tax gap that the darkness in the private wealth forest is not large, around 7%, which means that high wealth private groups paid around 93% of the total theoretical tax payable. The current ATO programs arise in this context of seemingly very positive compliance figures. The programs you will hear more about today are a far cry from when the Huey program began in the mid-1990s, where throwing a dart at the BRW rich list seemed to be the case selection process. I first came into contact with the Top 500 and Next 5,000 programs a few years ago as a member of the ATO's private group stewardship group. As I recall, it was an idea emerging from similar programs in large business and international, generally a reason for some caution. We shall see in time about its benefits and detriments for taxpayers and the ATO in the private wealth space. But to take us through the here and now of programs affecting private groups, I have great pleasure in introducing our guests today, Scott Parkinson and Amy James Velagich. Scott is an assistant commissioner in the private wealth area of the ATO. Scott leads the Top 500 program nationally and has regional responsibility for delivery of all the ATO's private wealth engagements in Victoria. Scott also, if that wasn't enough, has international level responsibility for the ATO's private wealth commercial deals program and not-for-profit compliance. Amy came to private wealth after starting her career in private practice, and after joining the ATO spent some time, a sentence some might say, in LB&I and indirect tax. Amy has responsibilities for private wealth, engagement and assurance, Western Australia and South Australia, private wealth national GST and delivery of the Next 5,000 program. She is also leading the ATO's implementation of the loss carryback measures. Our interlocutors this afternoon are my partners, Jonathan Ortner and Sean Carpsoon. My partner, Clint Harding, will close the proceedings. Now, let's have a conversation.
Thanks, Paul, for your insightful views on where we have come from and what may lay ahead. My name is Scott Parkinson. Today's presentation will open with a few insights from my colleague, Amy James Velagich, about the populations and issues that we manage in the private wealth area of the ATO. I will then provide an overview and practical insights into the Top 500 program, which will cover how we are changing our approach to the largest private groups, our intent in doing so, and the operating model we use in our engagements. Amy will then provide you with insights into the Next 5,000 program of work to enhance your understanding of our approach and to give you a sense of what a Next 5,000 client group should expect when we initiate an assurance engagement. At the end of each presentation, we'll take a few questions and hopefully provide you with some meaningful responses that will enhance your understanding of our current approach to engaging with the private wealth market. Over to you, Amy.
Thanks, Scott. So what you can see on the slide here is the what we call our key tax performance work programs for privately owned and wealthy groups. I'll just take you through the top line first. So these are what we call our population focused programs. And as you can see, and as Scott will talk about today, on the left-hand side there is the top 500 program, which is approximately that 500 groups. And in comparison to our whole population, that's only actually about 0.2%. However, given the turnover, the total business on the asset position, these clients are generally considered the highest consequence population. Now, importantly, Scott will take you through in more detail today. This is what we call an assurance-based program. We're focusing on forming a justified trust and ensuring that we have level of confidence that that client is paying the right amount of tax. So how do you get into the top 500 group? You either have greater than 350 million turnover, regardless of your net asset value, greater than 500 million net assets, regardless of turnover, greater than 100 million turnover, and also greater than 250 million assets. You might be a market leader or a group of specific interest, or you could also have an economic group with a total business income of greater than 215 million. So a range of ways that you can get here, but obviously all at the top of the market. The next program is the Next 5,000, which I'll be talking to you about more today. Effectively, that is your basically yourself with your associates that control wealth of more than 50 million and are not in the top 500 group. We make up about 3% of all private groups and pay approximately 10% of all the income tax and GST, compared to that top 500 program that pays approximately 10% all by themselves. Our medium and emerging groups program is the rest of the population, so around that 96 to 97%. We aim to have a broad approach, but obviously can't one-on-one with every single one of those clients. So we do both one-to-many and also specific reviews. So this population is medium groups, which control wealth between 10 to 50 million, emerging private groups, which have about 5 to 10 million wealth, and also medium private business. So that's where you have an annual turnover of more than 10 million. So moving on to the bottom two programs, international dealings, that's actually focusing on the private wealth population in relation to international risks. And then we also have the trust program, which some of you may know as the abusive use of trust program, which really targets the misuse of trusts to conceal information, mischaracterize transactions, or artificially deal with trust income. So that's a bit of an overview, but I'll pass back to you, Scott, for more on the top 500.
Thanks, Amy. So let's talk to the top 500 program. Now, our government fund the ATO to answer the question, are the wealthiest private groups paying the correct amount of tax? Now, the top 500 program is a methodology through which we seek to answer that question in respect of Australia's wealthiest 500 groups. Now, the model of engagement under the top 500 program is one where we adopt an approach of one-to-one and open and transparent engagement, under which each top 500 group is provided with the opportunity to demonstrate to us that they are paying and will continue to pay the correct amount of tax. Now, I think what's important is to get some background context about where we've come from and why we've moved towards this kind of model of engagement. Now, under our traditional models of engagement, our pre-contact process for risk reviews involved the detection of potential non-compliance. The initial engagement involved the detection of non-compliance, and the rest of the engagement involved the detection of non-compliance, with a consequence that we ended up with adversarial relationships with a whole bunch of wealthy groups who were actually compliant. Yes, we did find some problems in some groups, often related to large transactions, and we conducted audits and we raised assessments, but we also wasted a lot of time in seeking to find problems that simply weren't there. Now, we know from both the old programs and what we've done over the last few years that there are quite a few top 500 clients who see it as their civic duty to pay the correct amount of tax. And there are many others who may not see the payment of tax as their civic duty, but they do want to comply with their obligations. So why not provide them with an environment that is a model of engagement where they can work with us in demonstrating that is the case? Hence the model of effectively opening the door, inviting groups in to work with us to demonstrate they're paying the correct amount of tax. Now, the 500 assurance engagements themselves are for a duration of 12 months, and taken a holistic approach. That is, we're interested in answering that question, are they paying the correct amount of tax, which requires us to look at the tax issues that sit across the group more broadly and to get comfort that they're being reported correctly. In addition, and more recently, we've introduced GST assurance and sometimes other federally administered taxes into the suite of assurance activities that are conducted within the review to provide that whole picture. Because we're mindful that in disjointed levels approaches to engagement from different business lines, we often end up promising a disengagement for those groups who are complying with their income tax obligations, only to have them subject to GST obligations at some point in time in the future, which is not consistent with how we want to provide those levels of certainty around taxes as a whole. In addition, in doing our assurance work, we apply the 4 areas of justified trust, which I'll talk to in more detail in a moment. Okay, I can just move on there. Okay, so our intent under the program is for the ATO to obtain defensible data about the level of engagement with the tax system among Australia's largest privately owned groups. Now, that's really important because basically we can tell a story that is supportable and accurate and allows us to dispel what we largely see are myths about a population that are really unrepresentative. And the consequence of those unrepresentative myths is that we have this trickle-down effect where small business and individuals take more aggressive stances to their own compliance obligations on the basis of a misconception that the largest privately owned groups aren't paying their fair share of tax, or large corporates don't pay their fair share of tax, or multinationals don't pay their fair share of tax. So if the ATO across all those markets is being able to show that we are changing the system and changing tax compliance at the big end, it allows us to foster better relationships at the small end. In the long run, through the Top 500 program, we want to effectively reduce unnecessary compliance burdens and allocation of resources, both from the client perspective in having that upfront level of engagement and transparency, which removes the need for engagement and cost down the track. And from our perspective, we can allocate our resources away from groups that are complying with largely unnecessary recurring reviews and audit work, and move those resources into those groups who genuinely don't want to comply with their obligations. As I pointed to a moment ago, those groups who actually get to justified trust are able to get back to business. We're basically going to leave you alone, and we may talk to this at some point during the Q&A around what is meant by the monitor and maintain period, which is effectively simple check-ins, low impact engagements, and collaboration and service-based approaches to how we engage with those client groups. And in concert with our commercial deals engagement, we're here to help. We want to make the relationship with those groups who want to comply about how we can render assistance in helping them engage with the tax system. Now, being open and transparent with all concerned, the alternatives to the Top 500 program have to be considered. So it's the Top 500 program yes, it's an invitation to work with us to comply, but we're also mindful that some people don't want to accept that invitation. But we still need to answer that question that government asks of us. And in some cases, we are compelled to move to traditional review and audit activity on a risk basis in order to understand what those groups' compliance posture. And frequently groups with that kind of compliance posture are disengaged with the system, and it results in that ongoing and unnecessary cost that could be avoided through the Top 500 program model. Okay, so I might talk a little bit to justified trust, if I could. Okay, just going to move forward with that slide, please. Okay, so in 2016, the ATO introduced an approach based upon the OECD's justified trust concept about the positive assurance of tax compliance of large public and private groups. Now, in order to achieve justified trust, the model is around obtaining objective evidence that would lead a reasonable person to conclude positively that a particular taxpayer paid the right amount of tax, which is a higher standard of just saying, oh, we didn't find a risk. Now, one thing that's important to understand is that we tailor our assurance approach to the unique business profile of the taxpayer and the nuances of the private wealth population. So, for example, the tax affairs of private groups not only has to encapsulate assurance over the way wealth is created, which we might see in the public market, but it's also about assurance over the way wealth is extracted after it's created. Now, in applying the 4 principles of justified trust, we look at whether there's the risks flagged to market through our alerts and rulings program subsist within the group. We have to have confidence that tax treatments that are applied to what I might refer to as business as usual transactions and atypical transactions are demonstrated as correct, and that we understand the tax reconciliation, because we need to have confidence that it's complete and, importantly, understood in context. And significantly, we do see many groups with big differences between accounting and tax, and we need to understand those in order to have comfort that the adjustments are correct, and what spits out from a reporting level is consistent with the application of the law. Okay, so I might turn to some practical issues now about the interface for a top 500 client in working with us. So this slide that I've put up here is the client experience roadmap. This particular one is about to be published on our website, and it goes through each step of the way along the pre-engagement approach, how the engagement plays out, what the experience looks like at the end in terms of the certainty that we provide, and what's going to happen after at the end of the engagement. So we're being fully transparent in the client's understanding of how the experience should play out. And in concert with a few other points that I'll talk to in a moment about the process, it's important that you understand this. So when our people engage with you and they're not on program, you can bring them back to this roadmap and back to the approach to the engagement that I talked to them to ensure that we are all working on program. Move forward there. Okay, now the operational model under the Top 500 program is something that's important to understand. So what we seek to do is firstly obtain a holistic picture of what is happening with the group. That is, how is this group making its money? What are its economic activities? And we're mindful that we've got top 500 groups who are largely passive investors. We've also got top 500 groups at the other end of the spectrum who have diversified manufacturing and investment operations that present different challenges from an assurance lens. Once we've identified what that holistic picture looks like, we look to what tax issues flow from those activities. So in a simple model, if you acquire a capital asset, that capital asset introduces the consequences around Division 40 and the need for us to ensure that capital allowances are treated correctly. The sale of a good brings questions of derivation for. Just some simple examples of how that plays out. So once we've identified what those tax issues are that require assurance, the process involves testing whether those treatments are correct. And to the extent that they're correct, it's a tick of approval. To the extent that we may have disagreements about what the treatment is, we like to bring to the assurance engagement an agree to disagree mindset. And in the event that we can't move forward within the engagement product, we may need to move to traditional review approaches in order to get resolution of the issue. I'm also mindful that one of the real key things that's important in a justified trust lens is tax governance. And my apologies, I didn't mention it at the last slide, which I should have, because overlaying the principles of justified trust is the need for us to have comfort that groups who may even be complying now, have been complying in the years subject to the assurance reviews, will continue to comply. And what's important in that context is ensuring that there is appropriate frameworks, processes, and procedures in place to deliver those type of outcomes. So frameworks of accountability, and we're not talking about the same sort of frameworks that are applicable in a public company, but rather frameworks that are fit for purpose for the private market. In addition, we're interested in what processes are in place that when higher risk transactions are engaged in, that there is an approach that allows the group to obtain access to higher levels of expertise that may be required to ensure that those transactions are reported correctly. And the procedures that sit into, for example, the return preparation process to ensure that they are designed effectively, but also operating effectively in practice to produce the correct tax outcome. Let's move a slide there, please. Okay, right. Now, what happens at the end of the top 500 assurance review? So we work through what I might call the linear model of understanding what is happening economically, identifying the tax issues and testing the treatment of those tax issues and the governance that sits around it. At the end of the process, we'll arrive at what's referred to as an assurance conclusion. So it may be no or low levels of assurance. That is, we have little confidence that the entity within the group or the entities within the group have paid the correct amount of tax in the year under review. And usually this encompasses the identification of specific mistreatments which we need to work through. We can also get to a point of partial assurance where specific entities within a group may have paid the correct amount of the tax in the year subject to the assurance review. So particular entities are doing well. We can see that the treatments are correct. We can see that the governance might be pretty good as well. However, there may be other parts of the group where there are difficulties that we see that we can't provide assurance over. And I'm also mindful that one of the things that comes up in private groups is sometimes that the interrelationships between entities within a group, between, for example, a corporate landholding entity and an operating trust, may result in asymmetric outcomes where the compliance stance of one entity, so I can use the word, contaminates the compliance stance of the other, and it makes it very hard for us to assure either entity. I'm also mindful that you can have circumstances where we have partial assurance. That is, we've assured the years that are subject to the assurance review, but we can't provide justified trust in those cases because tax governance isn't sufficiently adequate to allow us to have confidence that they will continue to comply with their obligations going forward. And lastly, we have high levels of assurance. That is the justified trust narrative. And we have confidence in that case that all entities within the group have paid the correct amount of tax and will continue to pay. And that not only applies to the entities within the group, but also with regards to how the wealth that is created within those entities is extracted. Okay, so observations to date from the top 500 program. What have we encountered? And I want to be frank with you here because I see that this is a two-way street. We need to be assessing ourselves as we're going along about what we could do better. And also we need to be pushing to the client groups and making suggestions about what they might do better. So first, one of the first observations is that quite frequently the enthusiasm for the top 500 programs is good at the outset, that may wane over time. And sometimes we need to keep nudging groups along to continue to assist us with that assurance process. We also find some of our people, particularly some of our people who have got established ways and approaches under our traditional models as being too risk focused, and they can quite frequently lose sight of the question that they're trying to answer. So the engagement becomes about the identification of a risk and potentially acrimonious in the dispute, and we lose sight of the bigger picture assurance story. Tax governance issues are also an issue, something that comes up. Client groups with non-existence or low levels of documentation about how they approach tax compliance. Common issue is around that the intellectual property associated with the tax function is concentrated in the hands of very few people. And we see that presents as a risk for some groups if they were to lose access to those key people. And that, when you overlay that with a lack of governance, it brings great concerns about what happens in terms of consistency and continuity for future years when those mines are lost. The other thing that we've also identified from our side is that we're not being meaningful enough in actually providing suggestions that help top 500 groups identify specific things that they need to invest in. And we've gone out of our way over the last 6 to 9 months in developing some new internal tools to make sure that our people, when they engage with private groups, can make meaningful suggestions that allow groups to focus in on things that they can do to demonstrate incremental improvement over time. Other observations, top 500 groups, there are quite a few who will defer all their responsibility to their tax agents. Now, we respect that. That's fine. But what we want to ensure happens is that the top 500 group understands what the agent is doing for them, so that they have confidence and can bring accountability to ensuring that the agents, acting correctly in their interests and covering off all the issues that need to be covered off on. Because quite frequently, as we know, the scope of engagement letters may narrow the extent to which good compliance behaviour is being fostered, and we want to make sure client groups understand that those engagements accord with their obligations. Lastly, our shifting the goalposts and being inconsistent in our approaches, and certainly over the last 12 to 18 months, we've taken great, taken leaps, going to say, in actually ensuring that consistency exists through the way we actually put the frameworks in place internally to ensure that the people in Dandenong are doing the same work as the people in Perth. The people in Upper Mount Gravatt are doing the same thing as the people in Penrith, to ensure that that consistent experience exists, because it's a piece of feedback we've received from the market over time. Okay, I'm going to move on there. Right, so Amy, I've probably spoken on enough about the topic of the top 500. I'm sure you're trying to get the bit to talk to the next 5,000. So if I could hand over to you.
Scott, I might just make one comment
actually,
just so that we can reflect on the top 500 for the benefit of the audience, and then we can move on to the next 5,000. So,
yeah, sorry, Jonathan, my apologies.
No, not at all. So firstly, obviously, thank you, Scott, for taking the time to speak to us today. It was very, very invaluable insight, so we're grateful. And before I ask you a question, I wanted to make some brief observations. So in your last slide, you talked about the concept of institutional memory, or the risks associated with specific knowledge being concentrated in one or two key individuals. And I think this is a really good point. We frequently see situations where a family group relies on the CFO or the general counsel or some other key individual to manage and be across a number of matters, whether it's in relation to tax or otherwise. And there's a real risk of corporate amnesia, if I can call it that. So when those individuals leave, and in a tax context, this will give rise to compliance risks. So often, to try and ameliorate that issue, we work with them to create a framework to ease the transition across to new people entering into the group. The other point you raised was the intent to shift from an adversarial to a service-based model of engagement. And again, I think this is particularly important because all too often relationships break down in an audit context, and this isn't productive for either side. So I certainly think a collaborative assurance engagement is the preferred approach. However, it's no secret that certain top 500 groups have come out and criticised the program as being costly and time consuming. And the short response times and the risk of ongoing reviews does create stress and distractions for the business. So hopefully the ATO is being agile and taking on community feedback to ensure that the program doesn't turn adversarial before it's really even begun. And finally, just in relation to justified trust, it's been our experience, and you touched on this before, that it's very difficult to achieve in practice. Concepts like tax governance frameworks are still foreign to taxpayers, even within the 500 segment. So in this current environment, that really leads groups into a situation of partial assurance rather than high levels of assurance, which doesn't really get you into the monitor and maintain. So hopefully, as the market becomes more educated about what the ATO is looking for, then that will change in time.
I appreciate those observations, Jonathan. And one thing I want to say is that we've taken a lot of that feedback on board, ensuring that we are being as tailored as we possibly can be. Certainly, we don't want shotgun approaches to requests for information. They have to really fit the business that we're dealing with. I'm also mindful of particularly the impact on tax governance in not being able to get to justified trust. Hence our really big focus recently in ensuring that we are working as collaboratively with groups to help them have the confidence that they're going to comply with their obligations by reference to that governance framework. And that also goes into that key person risk issue that, you lose a key person. Quite frequently, your fallback plan, your plan B, if I can call it that, to ensure that you've got consistent and ongoing good compliance is referable to governance. It's the governance framework and the process and procedures that get you there.
Yep. Thank you. So I guess that leads into the question then, keeping with the theme of justified trust and some of the issues that you're talking about around governance. In your experience, how difficult has it been for top 500 groups to actually achieve justified trust? And just in keeping with that as well, what systems does the ATO have in place to manage and collate responses received during these reviews to ensure that on any follow-up, taxpayers aren't having to exhaust their resources answering questions that they've previously answered, particularly where they haven't shifted into that monitor and maintain situation?
Yeah. Okay. So as it stands at the moment, we have 53 groups of 467 that are in justified trust. Now that's a number that is a lot lower than I would like, but I'm also very mindful, and I often talk to my people in this context, is quality to the top 500 program, that is quality of decisions to the top 500 program, is what safety is to airlines. Absolutely essential, right? Absolutely essential. So the bar is high. Yep, I can see, and as I've noted, one of the biggest gap in making that bridge between being in a partial assurance environment to being justified trust has been tax governance. That's to your second question, and this is something that's also, it's very close to the work that we've been putting in over the last 12 months, is we have a thing called a tax assurance report, which is basically an internal document that is designed to capture that linear pathway. And when I talk to the reasons why we have that document, they are threefold. The first is to provide the basis for the defendable assurance decision. Prove what you've done is right in your work in working with the client, such that what you've produced as output is correct. The second thing is it provides us with, let's just say, our own level of intellectual property about what is happening in the client group, so that when we are called to provide services or to have discussions with our clients, we can do so from an evolved position. What we want to dispel is criticisms that we have frequently been subject to, that the ATO doesn't understand my business and I've got to go over the same ground over and over again. We're dealing with that problem, and my take on it is it shouldn't be happening from now. Lastly, that document provides our own internal succession plan. So when we're passing across staff who are tasked with managing 500 engagements, they can quickly get up to speed and be competent to carry on professional engagements with your client groups to ensure that we are developing mutual respect.
Great, thank you, Scott. Amy, over to you.
Thank you. So the Next 5000 program, as we were saying, is actually a key element of the tax avoidance task force. And when you would have heard me introducing the programs, you would have heard me say about Scott's program that it's an assurance-based program. And yes, we do have engagements that are also assurance-based in the Next 5000, but we have a range of different ways that we engage with clients, given obviously the size of this population. So similar to Top 500, our intent across the different ways that we engage is to provide the community with the confidence that these groups are paying the right amount of tax. Where we engage in relation to our assurance-based programs, we take a tailored approach and we look at the group's significant activities, events and transactions. And I'll talk to you today about how we actually apply that assurance approach with that tailored scope and focus. So I've already taken you through what I would say is the how you get into the program, about that 50 million. But some of those examples of our one-to-one engagements would be the Streamlined Assurance Review, which you can see on this slide here. Also, we have some targeted specific reviews, which are more of our traditional review approach. We have follow-up actions in our next action strategy, which I'll talk to you about today. And then obviously we have more of our one-to-many strategies, which might be through public advice and guidance, letter campaigns, and other things to help support and guide and provide education to this population. So I'm going to focus today on our Streamlined Assurance Review. It's become quite well known in the market since last year. And although we are now heading from July into our third year of the program, given COVID last year, obviously we didn't commence with a big number of cases like I had originally planned. And our first big tranche of cases really did commence from last October in 2020. So the scope of these is to really look at those significant activities, events and transactions of the group. We generally look at the last 2 income years. And as I was saying, we do apply the ATO's justified trust methodology, where we will look through those 4 key focus areas that Scott took you through earlier today. So I might just go to the next slide. Yep, similar to the top 500, for these types of engagements, we have what we call a roadmap. It's on our web content and it's available, which we send out with our notification letters and everything as well. So we start off with a notification letter. We give a client 3 months or less, if they prefer, to prepare. And that's really important because what we do is we've published on the website what we call our typical questions so that clients can actually prepare during that 3 months to make the most efficient review. Because I think one of the biggest things that we receive from feedback from clients is, you know, they come in, you give us an RFI, there's all this information that we weren't ready for, and then we have to respond within a certain time frame. So having that information available online is really to help you prepare and also know what you can be expected to discuss with the team. But importantly, no, we don't ask you every single one of those questions. We actually have an initial meeting with you, as you can see there at item 4, where we tailor what's actually going to issue out of that RFI to what we're going to focus on. And that really comes down to understanding your business, talking about those things around, well, what is really your main trading entities? What is one of those significant transactions that we do want to get that assurance over? And so that first meeting is just very critical to the scope of how we will engage going forward. And it is probably a little bit different from what you might have expected. I know when you have one of those products that you might have traditionally engaged us with, and it's a bit of a hi, this is what it's about. But we want to make sure that we do the most efficient and effective process for you. So that meeting is really about drilling down to how we can engage and focus in on those specific areas of focus. And then that way, you know exactly what we're going to be doing in terms of that review over the next few months. So we have that RFI, the information comes in between those steps 5, 6 and 7. We really do have more and more discussions about what we're seeing. There might be a second RFI if necessary to really firm up some aspects that we need to follow up. But through that period between 7, 8 and 9 there on the screen, we are explaining to you what we're starting to observe. We're talking to you about something that we might say, well, this is what we think is a bit more of an issue. And we have what we call a next action strategy. So the next action strategy is a little bit different, and we learned from other justified trust programs that are not that rolling program like Scott's, where we don't want to end up at the end of it saying, yeah, we didn't get assurance about this and just wait, we might come back. At the end of this program, what we will have is we'll have that meeting with you, and you should be having these conversations all the way, no surprises, where we'll talk about, well, what's the best way to resolve this? There may be some issues that we can say, hey, we both don't agree with this, and I think this may be something you might want to get a private ruling on, and that might be the way that we can resolve it. There may be things where you have undertaken to go back and have a look at the data because it just comes to whether we think the numbers match up, and then you undertake to actually self-assess that and amend it later if you have found an error. And then obviously there may be those situations where we understand it's a bit too complex to try to work through it in that manner, and we may end up escalating to some kind of review or audit as well. So there are a range of ways that we can resolve issues if they're not actually finalised at the end of the report, end of the review, but you will know we would have had that discussion throughout that time. But similar to some of the sentiments that Scott was saying earlier, we really want to work with you to find a resolution where we can within the review. I might just go to the next slide, thank you. I won't go through the key focus areas in as much detail given Scott has already taken you through those principles. But what I will explain is how do we apply the justified trust methodology and those 4 focus areas in that more reduced scope for the next 5,000. So for governance, similar to us, top 500, governance is a key for us to get that confidence that, you know, other than that specific issue, we understand that you've got processes and procedures in place that can give us a level of confidence that you're paying the right amount of tax. So we limit that scope to the preparation of your company tax return, and we really do focus in on those controls and the processes that you actually undertake to prepare your tax return. We look at the roles and responsibilities and advice that is sought. So if we're looking at a significant transaction, if it was something that was a little bit risky, did you actually go and get that advice? And what were your processes to identify that you need to go to get that advice? And then also we have a look at post-implementation review. Tax risk flag to market, we just focus on the ones that we think that are significant transactions and events, if there is one that we identify. Understanding significant new transactions, this is really where you'll see that more tailored scope. In the top 500, very robust approach where they look at that to get the confidence overall, but we really do refine that to the significant transactions, events or activities for this particular review. Similarly, with the understanding why your accounting and tax results vary, we do look at the different adjustments that have made, and what we have looked at through the other key focus areas. If there are variances that we can't explain or something that we were expecting to see, that's where we'll have that communication and further review on that as well. Thank you. Go to the next slide. So sometimes people ask us around, well, what is the difference between top 500 and next 5,000? Because they sound the same, except for you're saying it's a limited scope. So we will just quickly talk you through what some of the key differences in the approach are, and Scott will obviously add in some addition here as well. But we both do notification letters. Top 500 will issue that notification letter to let you know that we will start a review within that financial year. Next 5,000, we do send a notification letter as well, but as we were saying earlier, that's to give you 3 months notification that we will commence by the end of that 3 months. So the justified trust methodology is applied to both. With the top 500, as you would have heard from Scott, it really does approach that linear approach to obtaining proof of absence and obtaining that assurance in a detailed and robust evidence-based manner. For next 5,000, we also apply that methodology, but because we're not actually going to that full extent that top 500 is to say, here is your justified trust rating, we look at those significant transactions and events and we will tell you whether we have obtained assurance or not on those events. Similarly, we don't actually provide a rating for governance because, as you would have seen on that other slide, we really do limit that scope. But what we do is a similar approach to the top 500, where we want to be able to provide clients with recommendations on how they might be able to improve that are practical and useful and something that they can actually take away and look at implementing. So the focus on engagement for top 500, that's on a rolling basis. It's continuing year by year. And one thing that's really important is they look at the most recent year lodge and want to be engaging with you in real time. For the next 5,000, as we were saying before, we focus on the last 2 years lodged. So one of the things that I think is really important is that in the top 500, one of the outcomes that you'll get at the end of each year is the tax assurance report. And that's a very detailed, in-depth outcome of how they've actually gone through, what evidence they've collected, and it looks at those 4 different key focus areas and providing those ratings to you. For the next 5,000, we have what we call a streamlined assurance report. Now, importantly in that, we will explain which events, transactions, and significant activities we looked at, whether you have assurance or not. We give specific feedback about what we've observed during that review and also any recommendations in relation to governance. Now, one of the other things that's quite key for us, as I was saying, is that we do also say what the next action will be. So you have that certainty for those issues going forward at the end of that review. And as both of us have referred to today, we both do take audit and review approaches where issues may not have been resolved under that assurance approach. So Scott, I know that there's a lot of other aspects that you might want to add in here.
Oh, look, Amy, I think you've highlighted it. The key points of differentiation are the top 500 is taking a holistic approach. That's one of the key things there. The second, and then with the next 5,000, it's we are thinking about, well, when we look at this particular business, if something was to go wrong, what are the highest impact transactions, activities, or events that, if not treated correctly, would really give us concern that entity wasn't paying the right amount of tax, and then conducting an assurance process over those things and ensuring that governance is in place to make sure those things are reported correctly going forward. The 500, certainly, the objective here is to continue the engagement going forward. It's not just about the year of the assurance review. It's about being available to provide those long-term services with those groups, given their importance to the tax system, and importantly, given their significance in being able to tell a story that dispels that myth around the tax compliance posture of the largest privately owned wealthy groups in Australia.
Yeah, so that really does bring us to the end of the next 5,000 component of our presentation. We do have one additional slide that Scott will take us through in a minute in relation to the risk landscape. But yeah, that's really the overview, the high-level overview of that program. We have a lot of information on our web content, including those questions that we traditionally ask.
And so, Jonathan, do you want to ask any questions about the 5,000?
Yeah, thanks, Scott.
Sure.
Thanks, Amy, very much for giving us that insight. I guess just 2 points. We've had some feedback in real life from one of our participants on the Zoom about their experience with the next 5,000, and their feedback was that they found that the questions that were given at that 3-month point were a little vague, and they didn't sufficiently communicate, which entities, people or companies were going to be reviewed. And their feedback was that it was really only 1 week before the actual meeting took place when some of that information was crystallized, which I guess perhaps their frustration here is that, yes, they were given 3 months, but they weren't exactly sure in that 3 months how best to use their time. So I guess I'd be keen to hear from you. Is there a way that the ATO might be able to address that feedback or be clearer upfront at that 3-month point around which entities and people will need to be available?
Yeah, that's actually a really good point. So at the 3-month notification period, during that time, what we do in the ATO is the case team that has been allocated to your case will actually undertake all of that profiling. So one thing that you can do, if you would like to, you can provide your financials, so like your profit and loss and your trial balance to the team. And that will help them to really have a more focused approach in that profiling. Now, as we said, the 3-month time frame is what we give every client. But if there's something that you want to do in terms of contacting that case team earlier, we do provide contact details as part of that letter. But it's really interesting for us to hear that, because actually during COVID, we had what we called a transitional approach. We recognised that businesses were in different stages, and some of them actually wanted to commence straight away. And so for some of those clients, but it was really interesting because they preferred to start straight away, but have a longer time to respond to that initial RFI. And so we're just starting to commence our conclusion of those cases, and feedback like this is very helpful in terms of where we really do want to head going forward with the program. So that's very valuable feedback.
Okay, thanks. And I mean, it sounds like part of your feedback might be that the actual taxpayers, they can take a proactive approach in that 3-month period if they want to. So they don't need to feel like they can't ask questions, that they could pick up the phone and actually move the case forward a bit to save them some time. I think that's what I'm hearing from you about how that 3-month period could best be used.
Yes.
I'd also add to that, Sean, the importance of the client trying to work with the ATO around ensuring that we're steering the assurance engagement towards those highest impact transactions, activities and events, and not really wasting both parties' times with issues that might be irrelevant or not understood in context. Okay,
yeah, thanks, Scott. And Amy, my second area to discuss with you about the next 5,000, if I could, is really just to hone in a bit on the tax risk governance part of this, which I think is really interesting, because as we all know, in the large public groups and international space, the concept of tax risk governance has been around for a while, and large groups have been grappling with that for years, and it's a very well-known concept. But when I looked at your slide just before, where it says the ATO seeks to understand the design of, a client's tax governance framework. I think the word design there might overstate, the level of thought in many cases that some of these next 5,000 clients would have historically applied to their tax governance. And we're certainly finding with some of the next 5,000s that we're involved in, that we can clearly see that a number of the ATO's questions are really that they hang off and they ask lots of questions around governance. And I think there's some catch up to do on client and advisor side to kind of get with the program around what the ATO really wants these groups to be doing. And I think that'll happen over time. But I'm keen to, I guess, just hear your experience on governance in the program, and get some initial comments about, some of the responses you've already received, what's been good, what hasn't been so good.
Yeah, I think that's a really important question, because you've picked up on something that we are very acutely aware of. We haven't actually approached tax governance in this population before. So we are also seeing for the first time and observing differing levels of sophistication in tax governance frameworks that are already present. And I don't think that's actually necessarily a problem, because if you think about it, at the top end of 5,000, you'd probably be expecting something a little bit more sophisticated like the top 500. Whereas at the bottom end of that 5,000, you still may get picked up for a review of this nature, but you may have much more simple business. And so we are seeing that significantly broad range of the different levels of sophistication. And I think when we say things like design your governance framework, it's really important that we're not expecting to have some very pretty document with all these different colors and flowcharts. But what we are expecting to see is that you have the appropriate documentation of your procedures, checklists, and flowcharts that are actually practical and make sense, that they're effective for your business. And so I think what we are pleased to see is that for those that may not have had what is appropriate for their business even documented or in place or part of their process, they are taking those steps now to do that. And there is that interest and that want and understanding, like we said at the beginning of today, if someone gets hit by a bus or moves on, like, where is that corporate knowledge? And one particular insight that we can share now, because we're doing governance workshops across a number of cases, is we really want to understand practically what additional guidance we can give that will actually help people to take those next steps. And so my key thing that I would say that I'm starting to see out of that is that, as Scott mentioned as well, it's perfectly expected that clients will outsource their tax preparation, their advice to their advisors because of this expertise and specialists, and that's what they do. One of the things that I like to say is that you can outsource that work, you can't outsource the tax risk. So things that we would look in that situation would be, where is the data coming from that you're providing your advisor? Who actually prepares that data? Is that data quality data that you can rely on? When the advisor gives you back your tax return or your advice, who in the company or the organisation actually reviews that and signs it off and then says, yes, let's go forward with that position? So that's really something that we would like to see some improvement on. We know that people do it, but in terms of what is the actual process around that and why is something that is really starting to come through, where we're not seeing such sophisticated levels of tax governance.
Okay, thanks, Amy. I might, given time, I might ask Scott to talk to the final slide before I'll hand back to Jonathan after that to maybe take one or two more questions.
Sure, thanks, Sean. And look, I know risk, and what we're seeing is always a very popular topic at any external client-facing forum. So I'm happy to add this in to give you a sense of what we're seeing. And look, I've been in the private groups line for some 8 years now, and one thing that I'm very comfortable in saying is that, albeit that from the frequency may be different, The risks that we see in the top 500 population are usually, similar in principle to the risks we see in the medium and emerging market, or the next 5,000, but frequency obviously being a significant difference. And so obviously, wealth extraction and the application of Division 7A and the misuse of trusts is a common theme that's been around for quite a long while. More recently, we have seen the misuse of SMSFs in the top 500 and starting to see some emerging issues in the next 5,000, where SMSFs are used as depository for effectively business income, via creative structures that are designed to get that income there. The inappropriate access to concessions, misuse of and accelerated approaches to the use of Division 40. Look, R&D, certainly has had a lot of press over the course of the last few years, but we're definitely seeing significant improvements in R&D across the private wealth population and into the large markets. Most of the issues with R&D subsist these days in the bottom end. Capital versus revenue, the selective use of the capital versus revenue spectrum, and particularly common in property development, the creation of special purpose vehicles for single units in a 100 unit development, and then claiming capital gains tax treatment on the realization of those. Business versus hobby, a very popular thing in the top 500. There is many a horse, many a boat, and many a plane in the top 500, and we're seeing quite a few in the next 5,000. So the business versus hobby narrative around where you sit on that spectrum is something that's always a focus to us. More recently, we've had the shift back to looking at international tax issues, transfer pricing, the new wealth that's coming in from Asia particularly, and the treatment of inbound financing and effectively a round robining of profits into loan structures to conceal income has been one thing that we've seen, and also some intellectual property transfers that emerge out of R&D conducted locally that haven't been subject to any CGT or Division 40 application on transfer to other jurisdictions. And the old chestnut of the private wealth market, CGT. Historically, most of the disputes that we have had in the private wealth market have been in the context of big ticket transactions, and CGT obviously always a focus area that arises, and issues that are still subject to debate around things like K6, the access to particular concessions that provide tax advantageous outcomes. So I'm sure some of those themes aren't foreign to yourselves or the audience, but certainly areas where we continue to have a focus as part of our assurance programs. Thanks, Sean.
Okay, thanks, Scott. Look, we're probably out of time to ask any more questions, being at 2:29 now. So I might just hand over to Clint just to wrap up the session and give his thanks as well.
Thanks, Jonathan. I think I'll just close briefly, obviously, by thanking Scott and Amy on behalf of ABL and also on behalf of all of our attendees today. Thank you for your time and for your insights. I think you've both provided some invaluable colour to the matters that we've discussed. I mean, there's a lot of material on the ATO website that goes through all this, but it's always good to hear it in person, and I think you've brought some real colour to that I don't think you necessarily get when you read it from the web pages. So thank you. I'd like to also thank you all of our attendees for their time. I'm sure the webinar today has given everyone at least one or two things to take away and think about for themselves and their clients. A final closing observation from me, and something for Amy and Scott to take away, and I know the ATO is thinking about more broadly, but it's just the growing complexity in our tax system and how that flows through into programs like this. We've seen recently examples of the latest draft PCG on imported hybrid mismatches. There's new sets of rules, new sets of legislations, new ATO compliance approaches. A lot of these new rules don't have de minimuses that apply to everyone, but there will be a teething period where advisors and their clients get to know this, as does everyone in the ATO. So I think it behooves everyone to realise you're not going to jump out of bed one Monday morning and be an expert in reverse imported foreign hybrid mismatches and the 7 colours of ATO risk rating that go with those. So I urge everyone to take a calm breath and a cold towel, and if everyone can remain reasonable when we approach these sorts of things, I think that's a good way forward. But in closing, I'd also like to give a plug to our ABL Tax Disputes portal, which has been recently released on our website. It's now available and pulls together a lot of useful information, including a lot of the ground we've covered today with Scott and Amy regarding private wealth and high net worth disputes. And I wish everyone a good day. So thank you very much to Scott and Amy and for all our panelists. And I bid you adieu.
Thank you for the opportunity.
Okay.
Thank you.
Thanks, everyone.
Cheers, everyone.
Thank you.
Bye.